What up, gang? What up, what up, what up, what up, what up, what up, what up? We'll give a few minutes before we get started. Can I get a mic check from somebody? Then let me load the right thing that I want to have in my charts before sending it to you all. So just give me 1 second before I share screen. How we all doing, everybody? How was the weekend? What were the vibes like this weekend? Did we have a good time? Were we chilling? Were we going out? Was it a benda? Good weekends all around. Worked. Feel that. Let me just send a message to everybody, letting them know that we are starting now. Everyone. Then let me send a message and back to starting now. Okay, and then let me share my screen. So nothing too crazy today on this one. Can anybody confirm with me that they can see my Thinkorswim screen? I feel you on the bender pain, bro. I'm a little bit hungover myself. Right now, you should just be seeing a Facebook chart. I don't actually have the levels updated on that. All right, cool. All right, so first things first, let's talk about this gross chart that we have called the S&P 500, the SPY. This is ugly. This is a failed daily buy setup and a failed gap over red that ends up being a 2-bar reversal, selling off 250 points on the S&Ps, $25 on the SPY in a 2-day period. Absolutely nuts, crazy sell side action, right? So as of right now, these are my key levels for the S&Ps, right? So for those of you who aren't in the Discord, screenshot this. For those of you who are in the Discord, I'll obviously post it. Did post this one on the Telegram too, so there might be some stragglers in for the weekly prep. But this has been a crazy market with some volatile action. And yes, as somebody just pointed out, we have even more big earnings this week. So in terms of building a formal plan on how to trade this week, let's not put too much time or energy or stress into this Sunday prep, because all this can change with the flip of a good earnings report or a couple of bad earnings reports. All right, potential spam call. Get off my phone, you spammers. So what we're going to do is establish some ground lines. Actually, this level gets removed. Establish some ground rules in terms of scenarios for the week, right? I personally struggle to see a long opportunity tomorrow that I really love unless we get a lower test, right? So for all of you who are on these Zoom calls, whether you're in the Discord, whether you're a mentee, or whether you're just in the Telegram, we talked a lot last week about lower tests, right? About tests lower. That's what we were requiring for the early week last week, right? To show that we sort of failed to go lower here. So in order for me to go long on this bar, I would prefer a test, tomorrow's action. I would prefer at least a test lower than the previous day's action, and preferably into this 422.1. Pull back into 422.1 and get us a little bit of a rally. And I could see longs being on the table if that holds. They're still not my favorite though, because this is a very ugly chart and I'm more focused on shorts at the moment. I also need to change this 432.7 level because it's not a formal level. It's more of what I'm going to call a pause bar level, a pause bar hiccup level. So it does not get the same traditional color as my other levels. Above that, this 415.91, along with this day's opening price, call it 410.97, probably a little bit different. These two lower levels, and we'll over them. These two levels right here, these are, nuclear levels in my opinion. Below here, and when I say below there, we probably need acceptance beneath there, not just a flash wick beneath there, but acceptance below here. And I think we are truthfully going to head back down towards the 3,900 area. And I actually don't think that's off the table right now, just because of how harsh this selling is, right? This is brutal selling. This is 2 days off of a failed buy setup. I just don't think we're going to be able to reverse this within a week or two, right? This is something that's going to need some longer price action to develop, maybe a hammer down at the lows, right? We just have to see how price reacts at these levels, right? But this is going to be our guideline and sort of the price points that we're keeping an eye on is the levels marked up here. So again, screenshot this, do whatever you need to do. Let me change this to a longer day so we can get all the levels. Right, screenshot this, and this is where I'm keeping my eyes on from a levels perspective. This is the, oh, that's the hourly. I don't want that. These are the areas that I am watching as a whole, right? So make sure you screenshot these levels. At the bottoms, 410.97s. I probably need to adjust that one to be specific. 415.91s, 422.1s. Those are the lower levels we're going to keep an eye on, right? So with this, I also want to talk about some individual names that we should keep an eye on going into this week, right? Because again, tomorrow, I don't think there's going to be an immediate trade on the SPY tomorrow, unless we get like a gap up and maybe a small run into 432s. We can short that, but that's not, you know, anything concrete that I'm really looking at. So the other thing I wanted to do was check out a couple of individual names and the levels that I'm watching on those. So one of them being Tesla. Let me flip this into a daily chart real quick. I'm keeping an eye on Tesla because let's really quickly look at how Tesla looked with a SPY chart next to it, right? If we look at the SPY daily on the right here, SPY daily was down and murdered beneath its previous days range and previous support areas, right? Tesla on Friday was down less than half of 1%, right? And it was pretty much an inside bar with a small lower test right here, which this daily chart on Tesla can now go either way. If we get back above Friday's highs and back above the levels, then we do have the room to move all the way back up to 1075, right? I don't necessarily expect that to happen because of how brutal the SPY chart looks. But if we need longs because the SPY decides to have an inside day with a bit of a rally tomorrow and we want to capitalize on the upside movement, then we're going to be keeping our eye on Tesla for a break over 1027.4 for a quicker move up to the 1040 area. But really above 1040, we do have like $30 of room. It would require a cooperative market, but we do have that room. To the downside on Tesla at the moment, there is an hourly level that was removed due to my system at 978.50 essentially. So even though that one's removed though, I'm going to start to keep it there in just a different color because it's been such a key inflection point that I think it could still have some merit to us. But really, there's a level at 985.27. And if we can break beneath that, I think that's our early trigger to get into a short position on Tesla that will ultimately take us back to the 936 area. You can see we have a 936 area. And I remember trading Tesla when it was trying to break this 936 area. I remember specifically trading it on these days. This was tons of brutal fake outs where ultimately 936 was never broken. And from a pure price action standpoint, 936 was very key resistance, right? It was key resistance. We broke above it. We never retested it, right? We never retested it. So would it make broader sense for Tesla to come back and retest this 936 area before getting back, you know, before starting to get the ultimate another leg back up that we want, and ignore some of these levels down here? I need to chop these up. It would make chart sense from a structure perspective for Tesla to pull back into this 936 area as a whole, right? So from a short perspective, I'm very open-minded. If ES starts to break down, I think Tesla will give as well and give us a move down into that 936 area ultimately, right? Again, ignore some of these lower levels. The triggers that we're going to watch are these 4 levels in the immediate area, right? We're going to keep your eye on 10. Oh, mute. Sorry. Thanks, fam.
Injured arm to the bed, actually. Oh my God.
Sorry about that. Um, these are the four levels we're going to keep an eye on, right? 985.27s, 978.50s, 1027 and 1039, right? Those are our key levels in the reaction points. In between those levels, in my opinion, Tesla is a do not trade zone. And let me type those out in the chat right now so everybody can just, because I know my screen gets a little bit small. 1027, and they're also on my Instagram, 1024.7. But I think this could be a nice trade, so I want to make sure that everybody has access to these levels. 978.50. So just type them all in the chat. Make sure you copy and paste those so you can have them saved up. But Tesla is a big watch for me this week. The main reason why, and I've already mentioned this, but I would love to quiz you all, and I would love to get multiple answers from, I would love to have people firing in the answers in the chat. Why is Tesla on watch again for me? And mainly, why is it the one name that I'm not close-minded to on long positions? Anybody? No earnings is not bad. Needs a retest. Relative strength. Not bad. Anybody else? Need a haircut? Facts. I do need a haircut. And I can't get that shit without Elon. Yeah, but it's the strength compared to the spies, right? It's really the strength compared to the SPY, right? Again, we pull up these charts side by side to each other. SPY was not only burning beneath the previous day's range, but beneath the support area that it had held beneath the key level, while Tesla barely flinched. Now, few different reasons that could have been. Someone in our chat earlier today mentioned that it could have just been due to high open interest at the $1,000 strike, meaning they would pin it at 1,000. Logical, that happens all the time. However, if that's the case, it doesn't really matter that that's why, because this daily chart still has set up the way that it's set up, so that if we get a bounce in the S&Ps, Tesla will have the potential to make a strong move up. That being said, if the market continues weak and it turns out Tesla was just propped up by this open interest at $1,000 strike, then all of a sudden that opens Tesla up for a very clean move down. And I do believe this is the kind of move that could come within one day, right? Where we get like a gap down on Tesla, retest of the level, and then a straight down to the 936 area, which I don't even know if by my system there's a level at 936 technically anymore, but it's such a key area that was never retested. In my opinion, it would make sense for that to get retested before we start to continue to move up, right? Now, 936 on Tesla, if we start to move down under like 975, say you get short and we pull into 950s, 945s, 943s, don't be a dick for a tick trying to get 936 exactly, right? Because this is a zone. This is, generally speaking, a zone where we could stop anywhere there and it would make chart sense. So don't be a dick for a tick, all right? Don't be a dick for a small amount of money. And actually, that's just a life lesson that you should take away, not only in trading, meaning if your exit is 5 cents away and the stock looks like it's having a whole lot of trouble getting to your 5 cent away target, just sell, because it's not worth being a dick for a tick. In life, it's not worth being a dick for a tick, right? Don't sweat the small stuff. You're at a pizza restaurant, they forget to put one topping on your 18 topping pizza. Don't be a dick for a tick. It's not the end of the world, all right? Unless it's the pepperoni, then you got to be a dick about it. Nonetheless, moving on. The last couple of charts I wanted to review, you all know me, I rant. You signed up for this. Last few charts I wanted to review are Caterpillar, who I think they might have earnings this week. I'm not 100% sure. But Caterpillar and AMD. Now, Caterpillar's chart is ugly. It's ugly. But let's compare it again. Okay, they do have earnings. Good to know. Thank you, Daniel. Again, relative to the SPY here, though, it's safe to say that Cat didn't have relative strength on Friday. That's fair. Both these bars look extremely similar. They gapped down, retested, and then they were burned down to the stake, as if they were witches from Salem back in the day. Right. The difference between these two, though, is that Cat pulled back, broke down, or excuse me, SPY pulled back, broke down, and broke beneath this little previous daily area that it was holding. SPY has not broken beneath, or excuse me, Cat has not broken beneath this previous little area that it's been holding, right? Similar to Tesla, Cat does have a level here that I think could use a retest, right? This 205 area. I think that could use a retest. And I think that could be a nice potential, maybe like an early week selling off to this area, then on earnings go long around there for a reversal, right? But really, from a levels perspective on Cat earlier in the week, I'm going to be keeping an eye on these two main ones. I do think that from this daily bar, I would prefer a gap down before I get into any sort of longs. And what I think would be an interesting sort of setup is that if we can get a spike beneath these previous days lows, right? These days right here, spike beneath these lows, but right into a level that we have at 213.26. We do have a level there from different day, right? But that would break us beneath these lows, maybe stop out some people and have a hammer flip to reverse right there. That would be a scenario in which I'm open-minded for longs on Caterpillar. Same type of thing, pulling back into 208.87s. And then in terms of an upside move, if we really want to be like secure in the upside trade that we're taking without lower level tests, I would want us at least back above 229.87, back above that level, or you can get opening, small positions back over the open from this day. But 229.86 is a level where I would prefer us to get back over. And I think then longs are much more back on the table, right? From a weekly chart perspective, that was a really ugly weekly bar, but it's not irreparable, right? It's not irreparable, if that's the right word. I don't know. It's fixable, right? If you get a lower test in a hammer here or some sort of consolidation here, it's fixable. That being said, you could also very well make the case that this is a broader lower high and a failed break over this level, and that CAT is coming back to the lower end of its range at the 190, 180 area, right? So more of a sit and wait and see on this one. But I bring this one up because it is an earnings name, and all it takes to have an amazing week is one earnings trade. And I'm not talking about a gamble where you earn YOLO on the earnings before the report, whether it's before market open or after market close. I'm not talking about that. I'm talking about a next day earnings setup, right? A next day earnings setup. So if something has a great gap to a level where there's awesome risk reward for you to take a really fire trade, right? Like the one I always reference is UPS from last year. It's probably about a year ago in this time, right? And I literally still have it marked out as to why this was such a great trade. I think Ron and I might have even covered this one in our one-on-one a long time ago. But why this was such a great trade is I caught this bar, right? I caught a move within this bar. It like gapped up to here, but it had so many different things lining up, and it was an earnings type of setup, or it was an earnings setup. Yeah, here it is, just about a day ago. It was literally a year ago, almost to the day. Yeah, a year ago to the day. It was this bar right here on the daily chart. It was one of my best trades of all time, best executions of all time. A gap into new all-time highs, gap over red on an earnings, and that one trade made the month. Right. And I wasn't swinging it as a YOLO into earnings. It was an after post earnings play. So all it takes is one or two really good post earnings setups to make the week. And guess what? We have a shit ton of earnings this week. So there should be at least one or two good setups within those earnings plays. Right. So that's really going to be where my focus is on this week, is no swing trades, none of that bullshit. Going to just keep myself day trading good quality setups, and preferably some sort of earnings gaps that we can really take advantage of. I think those will be some of my favorite plays to execute on this week, right? With that, I don't have much else, and I don't want to do like a thoughts on segment right now just because I'm tired. It's Sunday, and I don't think, all these charts look the same. All these charts look ugly. So all of my thoughts on are going to be very similar. Any debit spreads, not until we have more data, Myron, not until we have more data about how the charts look, and any of that before looking into debit spreads. I like debit spreads, swing trades long. So tips on not forcing trades. Justin, if you have a pre-market plan written out every single day with the exact trade setups that you're looking to take, then you're going to be more likely to follow that plan and not to follow our plan, to follow our plan on not forcing trades, right? And sort of, if you have a plan, it's all planned out in advance, then you're much less likely to force any trades. Yes, sir. As Ron. So we'll be dropping an interview later this week. Me and Ron and I. Ron was a student in the first mentorship group our top student, the first one to be promoted to a moderator role within the room. He's now a member of my team, and I'm super excited about that. We did an interview earlier today that will be dropping later this week. Super excited. You guys should check that out. It's a really great conversation. I'll have more mentorship V2 details coming out later this week for those interested. And then please mark your calendars for this Thursday, time TBD, but this Thursday, going to be doing a free webinar on trading psychology, because I think in this current market, having a great understanding of your trading psychology is like a necessary requirement to survival. I saw way too many people blowing accounts last week. So we're going to have a psychology webinar on Thursday of this week. Mark it, don't miss it. Thursday, psychology webinar. We'll send out an invite to that later tonight. All right. So with that, fam, I love you all very, very much. If you're not in the room, you want to join the room, code RAKE is still active. Would love to have you. But other than that, I just wanted to give you all some sort of preparation for the week, and I hope you trade safe. All right. Don't do dumb shit this week. Save your cash for when the charts are more favorable as opposed to more random. All right. All right, fam. Love you all. Have a good rest of the night and be safe. All right, team. Talk soon.